Hey everyone, welcome back to another portfolio update video. The portfolio is currently sitting at $7,667.10. On the day, we are down $13, but up $5.87 after hours. On the week, we are up $69.15 or 0.91%. Nice little recovery here. We'll talk about that later. For the month, we are up $164.82 or 2.2%. For the 3-month, we are up 167.1 or 2.23%, which is basically the all-time. And we had a very swift recovery from last video's pretty heavy drop. So we're going to cover that in today's video. Alright, so let's go over the positions here. We have a charge point 750 put expiring next Friday. We have a forward $13 put expiring next Friday. We have a key $9 put expiring next Friday. A Labu 550 put expiring next Friday. A Labu $5 put selling next Friday, and two of these actually. We have a T call expiring next Friday, a WBD put expiring next Friday, and then we have a key $12 call expiring in 2024, and we have a SoFi call debit spread expiring in 2025. So those are all of the current options positions, and there's a couple things different here from last week. So I ended up rolling forward down from 14 to 13. I ended up breaking up the short strangle I had on key, rolling the call out to 2024 and just keeping the put. I ended up rolling the Labu put up for more credit at the same expiration. I ended up rolling the T call down at the same expiration for more credit. And aside from that, basically all of these expire this Friday. So you can see we have a ton of equity too. So all of this equity is going to go straight into the account by this Friday, which I'm really excited about because it's a decent amount of money. And then, for example, this key call will be expiring way a ways. And I'll tell you why I did this in just a second. But yeah, on the portfolio spreadsheet, you can see here for this week, we ended up, let's see, okay, that was last week. For this week, we got our Tesla dividend. We also rolled that T call down for more credit. We also rolled that Labu put up for more credit. So you can see those two plays here. And then up here you can see our forward and our key roll. So we ended up rolling for a $20 debit on forward just because I realized that there was both a dividend and earnings coming up before expiry, which I was unaware about prior to selling the option. So I wanted to change my position to be more safe. So I ended up rolling that down to a position I thought was safe, even though I had to take a debit for it. And then for key, I ended up rolling out 180 days for a credit, and also for 1.5 strikes of capital appreciation. Because if we look at our key shares, you can see key has been on an absolute rip. So if you guys remember, we bought key at $9.29 per share. We bought 100 shares of key, and it rips all the way up to $12.05, and we had sold the $10.50 covered call. And you can see that just got absolutely blown past all the way up to 12. So what I've done here is I've rolled the short call that I had at 10.50 out 180 days, but to a higher strike of 12. That way, not only do we get the full premium of $140 that we would have gotten from the 10.50 call over this period of time, but it also gives us $150 of capital appreciation, and it allows us to collect the dividend during that time. So ultimately, we'll end up making an additional, almost 30% off of key by doing this roll. It'll just lock up our shares for 180 days, which sounds terrible. But this amount of premium is actually in line with our 2% a month goal. So basically what we've done is we've essentially locked up our shares for 180 days or 6 months, and it'll give us the exact return we would have gotten anyways, while also collecting a dividend and getting $150 more in capital appreciation. So to me, it was kind of a no-brainer, and I really love this play, and I think it was the perfect decision for handling key just rallying way past my strike, because now we get to keep the shares, sell them at a higher price, get the dividend, and get the premium. But yeah, I mean, you can see we're up $215 on just the shares alone, not to mention the cash secured put I sold on key is worthless now. If we can find that here, you can see we sold this cash secured put for a credit of, let's see, $28, and it's currently worth 1 cent. So not only do we have all of those capital gains, we also have this huge premium that we've made, which I'm just going to keep selling puts on key over and over. We're going to get the dividend eventually, and also we're going to get this $150 in short options premium, which we've already collected a pretty big chunk of anyways. So yeah, key is looking absolutely amazing right now. Aside from key, the next big concern has been AT&T, and if you remember last week, AT&T was just plummeting. I think when I made the video, it was probably like around here So at like a low 1353, but then on, I think it was a Wednesday, we had an absolute pump on AT&T. It went from 1345 to 1461 in pre-market alone, and it's just been rising ever since. So that is exactly what we want to see. The news that made it drop was essentially invalidated, so that ended up causing this huge rally. And yeah, I just held through the storm, kept selling my call. Basically it didn't change anything about my position, and I'm glad I didn't, because now we're in a pretty nice spot with AT&T, all things considered. Even though we are still down 7%, we've already collected the $30 from the initial put, and we're gonna have collected another $15 from the calls we've sold in the past 2 weeks. So this 7% loss is looking more like a 4% loss rather than 7%, and we're just going to keep wheeling this. Eventually we'll get that dividend too. Going to keep wheeling this above our original cost basis, and we're not going to lose any money on this position. I can basically guarantee that. So we're just going to let this play out and see where it goes. But yeah, aside from that, guys, I'm kind of looking towards August here, and I'm kind of trying to do a few goals for August to just improve my trading and do better than the past few months. The first strategy I want to try that I kind of came up with, I'm sure it already existed, but I just kind of came up with it, is what I'm going to call the rolling wheel. So on Labu, I really like Labu stock, and they have just so much premium, and you know, I've been wheeling this for months now, and I've made so much money just wheeling this. So the idea is that what we're going to do is we're going to go to each expiration date, and we're going to sell a put. So we're just going to go each expiration just like this. Boom, boom, and then boom. So this is the idea. We just go through each expiration date, and we sell puts on every single expiration date. And as soon as that put on this first date, as soon as that goes to be worthless, I buy it back and I sell the one for the next week. So I would move it out to September, and I would sell the next put, and I would just keep doing this. And that's why I'm calling it the rolling wheel, because it's the wheel strategy, but I just have so many positions that are constantly being moved out. And so what I'm hoping to do is either get assigned at a good price, or to just keep pulling in premiums every single week and really take advantage of Labu's sort of sideways movement, because it's pretty volatile, but it's stayed very tightly in a range here from around 550 up to 650. And you can see at one point Labu had been traveling between 6 and 8 for literally just months on end, and that would have been a great time to just take advantage of premium and investing and selling options. So I'm kind of trying to do the same thing here. So that's my first goal. Second goal is I want to sell all my calls for the end of the month. So not really looking to mess with weeklies for calls. I just want to position myself well for the end of the month. I want to sell cash secured puts more aggressively. I want to dollar cost average into more stocks and ETFs for the long term, and I also want to try and sell strictly weeklies for puts going forward, because I think there's a lot more value in weeklies, and I would like to take advantage of that more. So we're going to try and do that going forward. So that should give us some more action in the market. And speaking of the investing for the long term, you can see I have a ton of stock positions now, some that were on my watch list, and that's because I've set up a ton of recurring investments. Some of them are daily, some of them are weekly. It's kind of all over the place, but these are all stocks that I'm looking to either wheel, whether they be the risky wheel or they be the safe wheel, which you guys know is my watch list here. So whether it be either, I'm just going to start dollar cost averaging into them, especially reinvesting premiums. Say like with Key, say I make $50, I want to reinvest that straight back into Key for an even larger position. So yeah, going forward, we're going to do a lot more dollar cost averaging, a lot more long-term investing, and I just think that's probably the best way to go. So you guys, I'm here on my YouTube page, and you can see watch time from subscribers. 90% of you watching this right now who are hearing my voice in this very video are not even subscribed to the channel, whereas 10% of you are. So if you're interested in seeing weekly portfolio update videos where I sell options, I trade options on Robinhood, please consider subscribing. I put up a video every single week, every single Saturday I try to. So if you want to see those, please consider subscribing. But yeah, guys, aside from that, thank you for watching this week's portfolio update video, and I'll see you in the next one.